If you're struggling or feeling lost in price action, by the end of this video, you'll walk away with a simple secret that will make you thrive in any market condition. When we look at market structure, I want you to view it as a collection of data captured in different time frames. And this collection of data has two important data points, which are swing high and swing lows, or institutional swing point. So in a bullish trend, it's going to look somewhat like this. In a bearish trend, institutional swing point is going to be presented like this. Now in real time, let's see how that's going to look. So here's a piece of price action on Euro USD on the daily time frame. So currently, we can see that the structure is moving towards the sell side. And currently right here, we have a bullish momentum to the buy side. So let's see what price does going forward from here. So right now, we have this. So the moment price retraces down here, we have a swing high created right here and also a swing low. Going forward, price takes out that swing high, making that area an institutional swing point. And now we have a new swing low formed right here. So let's see what price does. So right now we have a swing high created right here and a swing low formed right here. And we can see how price is reacting off this institutional swing point, which is a data point in market structure. Going forward, let's see what price does. We can see how price run this particular swing low right here, reacting off this institutional swing point and taking out this particular swing high right here. Now this swing high becomes an institutional swing point, and now we have a new swing low created right here. Now we identify our new swing high right here, and we have an institutional swing point right here. We also have an internal institutional swing point right here. So going forward, let's see what price does. You can see how price reacts off this institutional swing point levels right here and attacked this particular swing high right here, ultimately taking out this extreme swing high right here. Going forward in price, this swing high becomes an institutional swing point. So you can see how institutional swing points combined with swing high and swing lows are important data points in market structure, as they can help you gauge the market, time reversals, and know when to enter in terms of retracement. Another important institutional swing point in market structure is to help you gauge the market in consolidating market condition. Now looking at this piece of price action right here, we can see market is in a consolidation. And if we were to predict market's move, based on market structure, we'd expect price to keep pushing lower. In other words, we don't want to see price take out this high, rather we want to see price take out this low. So let's see what price does. We can see how price came down lower, failed to take out this low, and pushed higher, running out this series of liquidity right here. That would have been a stop out for a lot of traders, as they would have been used as liquidity. So it's going back, let's see how institutional swing points would have helped us avoid that particular stop hunt. So looking back to this particular price level right here, we have an institutional swing point right there. So whenever you are in a consolidating market condition and price is hanging in a balance just like this, without reaching for an institutional swing point or running a series of liquidity, what you want to do is sit on your hands and wait for price to revert to either an institutional swing point or take out an area of liquidity. So in this case, going forward, we can see how price retrace back into that particular institutional swing point, running out all this series of liquidity right there. And we can see how price gave us a reaction in price all the way to the sell side. So now we can confidently expect price to sell off going forward from here. So let's see what price does. And there you have it. So this is how you can use institutional swing points, swing highs and lows to actually gauge the market and time reversal points, or even stop ons or liquidity grab, as we saw in this case scenarios in market structure. So going forward, let's see how we can use the ideas shared so far to frame a high probability and profitable setup. So right now, in this piece of price action, we can see that market structure is currently bearish. So let's outline the various data points in price, as that will help us gauge what price action is about to do. So far so good. We've outlined the various data points from institutional swing points to swing high and swing lows. I know the chart kind of look rowdy, but for the benefit of this example, we have to outline the various areas in price to help you understand how to use the ideas shared in this video to frame setups. So right now we can see that price has pushed all the way to the buy side and price has reacted off this institutional swing point and this institutional swing point right here. So based on the examples and ideas we saw earlier, we will naturally expect price to reverse from this particular point, as this will be the end point of the retracement, saying that we are in a bearish trend. But coming to this particular area in price right here, we also have an untapped new institutional swing point created right here in price. So though price has reacted off these institutional swing points right here, moving to the buy side, price coming down to the sell side, we have to also interact with this institutional swing point all the way to the sell side. So let's see what price does. Right now, we can see our price pushed higher, ignoring this particular institutional swing point right here and reaching for this particular fair value gap, giving us a new institutional swing point right here if price is to move to the sell side. So going forward, let's see what price does. Now we can see our price has retraced into these institutional swing points, moving to the sell side. You can see our price defaulted this first institutional swing point, though we can see a reaction in price right here when price tapped into this. But that institutional swing point was not enough to hold price. Price reached for the second institutional swing point, but was not also enough to hold price. You can see our price dropped down to the third institutional swing point. And you can see from then on, you can see our price gave us a good buy candle reaction right there. So this is an indication that price from this particular point, they want to keep pushing higher all the way to the buy side, attacking this particular swing high. And if you watched the previous video I shared about market structure where I spoke about swing ranges and liquidity, you also understand that we are in a swing range from this particular swing high to this particular swing low right here. We don't see price push lower, defiling this particular swing range. We don't see price respect this last institutional swing point and push all the way to the buy side. First using this swing high as first draw on liquidity, then ultimately this particular swing high. So drop it down to the lower time frame, which is the 1 hour. You can see our price has given us a good reaction in price right here, which is our W pattern right there. So we can confidently frame our risk to reward, putting our stops below this low, aiming for this particular first draw on liquidity and seeing if price will reach for this second draw on liquidity. It's going to give us a 1 to 3 risk to reward. But let's first aim for this particular draw on liquidity. So let's see what price does. So right there, we can see our price has taken out this particular first draw on liquidity, which is our first area of targets. Now let's see if price reach for this ultimate swing high, which is our second draw on liquidity. And there you have it. So you can see our price ultimately took out this second draw on liquidity, which is our swing high. So this is how you can use institutional swing points, swing highs and swing lows as data points in market structure to be able to frame high profitable and high rewarding trading setups. So if you find value in today's video, hit the like button, hit the subscribe button, and see you in more videos.